Hello and welcome to the show. Now, big deal this week has to be the completion of the sale of Essar oil to Rosneft and consortium of Trafigura and UCP. Now, $13 billion mega deal and by far the largest when it comes to debt reduction exercise in India. Over 70,000 crore rupees or 50% of the total debt on Essar Group will be reduced by this massive transaction. Now, lenders are a happy lot with their exposure coming down towards the Essar Group and in turn quality foreign investors really taking over $5 billion of debt on account of Essar Oil. Now I quiz Tony Fountain, the new head of Essar Oil, on what he's going to do on the new owners coming in terms of the enhancement of Essar Oil's performance going forward.
Clearly, Rosneft has tremendous oil supplies. Trafigura has an extensive set of access and expertise around the world. I mean, all the relationships with those companies, I mean, the intention is to fully use and commercially optimize the set of assets that are there to the maximum they can, and to access that information and expertise. But the near-term relationship with those companies, whatever we do, it's always going to be to buy the best crude, sell the best products to the best markets, and whether that's Rosneft and Trafigura or whether it's another company, all those deals will obviously be at arm's length basis.
So to enhance the current operational performance and with Rosneft on board, do you think crude sourcing will be something very important? And also, is there a plan for that in terms of synergies?
So I mean, in terms of crude sourcing and possible relationship with Rosneft, I think if you look at the value in commercial opportunities, probably crude sourcing is, on a day-to-day basis, is the single largest source of getting that right. Is probably maybe the single largest source of commercial optimization. Run the best slate we can.
You spoke about the financial strength and strength of balance sheet as well. You're taking over $5 billion of debt by way of this transaction out of $12.9 billion of enterprise value. Now, when are you planning, by when, to refinance this $5 billion debt? Because definitely the credit rating for you could be far better than what Essar commanded.
Well, I hope that I hope our financial strength will immediately be reflected. But of course, now it's a privately held company. But we will look to look at this $5 billion of that as working capital. $4 billion is more traditional categories of debt. One of the early priorities, so I'm talking months rather than years, is to work with the banks and the financial institutions to look at the ways of refinancing those sources of debt in a way that is more optimal for the company.
This few months means this financial year, this calendar year. Is that a timeline that you're working with as of today?
I don't want to bind the CEO exactly to a timeline, but it's certainly a matter of the next several months rather than extending into the next year.
All right, and so this financial year, you're saying that you should be doing it, but are more Indian banks with exposure?
I didn't, just be clear, I didn't say necessarily this financial year. I said over the next several months, but less than
less than a year.
But less than a year's period.
All right, thanks for correcting. But are more Indian banks with exposure to Essar Oil currently are willing to stay on by refinancing, or are you going to get a large part of the debt refinanced by global lenders?
I think that the financing and the source of finance really hasn't been determined, but I do think that we've had tremendous support from the Indian banking community. So I have every reason to think that the Indian bank and financial institutions will be a central part of the forward financing program as well as the historic.
All right, and your Iran liability, is that part of the $12.9 billion enterprise value?
The Iranian liability as part of this agreement will be resolved and settled.
So you have a brand royalty which you will pay to Essar Group as part of this transaction. Indeed. But not a non-compete fee to the company, to the erstwhile promoter.
That would be a correct understanding.
And finally, with this platform, any inorganic acquisition also lined up in India? Could that be something that you look at in future?
In terms of inorganic opportunities, I certainly don't want to talk about what the other plans for the owners might be, but certainly in terms of Essar Oil, we start from a platform of having opportunities around the retail expansion and a set of attractive opportunities that we want to have a good plan for around the existing assets, and that will be our early focus.
So that was the word coming in from the new management, more acquisitions from Rosneft in India. Well, you can't rule out that. But here in this transaction, the seller is equally important because of being the single largest pressure point for most of the lenders when it comes to bad assets. And Prashant Ruia gives a breakup of the debt reduction plan and who gets bought by way of this debt reduction exercise through the transaction of Essar Oil. Take a look.
Overall, as a group, we have brought down more than 50% of our debt. Obviously, all the debt in India stays there, and nearly about $3.5 billion will come into India. We are repaying holding company debt, which we have already clarified, and Indian banks' debt, which is getting repaid, is a very small portion.
So that was Prashant Ruia. But remember, the task for Essar Group is not yet over because Essar Steel is the big one in focus. And the Ruia family is keen to ensure it doesn't lose control of its indebted steel company, which, remember, is undergoing insolvency proceedings at the NCLT. And the biggest takeaway for me is that Prashant Ruia maintains that the group has sufficient firepower to retain control of Essar Steel. And the Essar Oil deal, remember, has added to its strength on fortifying his steel company from probably a takeover by the competitors like Tata Steel and JSW Steel. So this space is getting very, very exciting. And what's also exciting on my radar is the IPO street. And this time, I thought of getting an investor view to gauge the interest while the markets seem to be entering a consolidation phase right now. Pankaj Tibrewal, the fund manager at Kotak Mutual Fund, will be joining us next. Stay tuned for that.